Hello, this is Jordan, and this is your precious metals video market update. This video is being recorded on the late afternoon of Sunday, September 20th, 2020. So we're only hours away from the start of fall. Summer is over. Thank you so much for joining me today for this video, and I'm going to give a technical update on the precious metal sector. Okay, so last video we did was I think it was at the end of July or the very beginning of August. We said the sector would cool off, and that is what's happened, although I have to admit that the sector hasn't corrected as much as I've thought. It's been a little bit stronger during this correction than I expected. So where we are right now, the metals have been holding up fairly well to this point, and we see here we have the daily candle charts, gold at the top, silver at the bottom with the 200-day moving average. And I'm personally not convinced that we're going to see the market break to the upside here. I think a break below support level shown in the chart, I think that's more likely. So now I'm not betting on this or selling things, or you're trying to sell things and buy back in. I'm just giving a glimpse of some potential scenarios. And the scenario to the downside would be if gold loses 1920, which is only a couple percent below where it is, a move below 1920 would probably lead to the low 1800s. And for silver, a move below 26 would probably lead to around 23. And what's interesting is so far gold, that initial correction only over a couple days, the beginning of August, where it got down below 1900, but then recovered most of the losses the same day. From top to bottom, gold has corrected 10%. Now, where gold is compared to the past, and this is something I discussed in my premium update this morning, is that there have been two other times when gold has followed a legitimate bear market, but then it made a new all-time high. So that is roughly in 1978, and I think at the end of 2009, 2010. Now, after that first new all-time high, those two times, gold corrected. I believe I'm looking at my notes here. It corrected 20% actually in 1978. In 2009, 2010, it corrected 15%. So at this point, gold has only corrected 10%. And if we look at, and also those 2 points in history, the correction after the move to new all-time highs, both times gold bottomed the 200-day moving average. Now, if gold were to correct 15% this time, it would take it down actually just below 1800. And the 200-day moving, gold is still, and same with silver, there is still a huge distance from where they are in the 200-day moving average. So although it may look like the metals are kind of consolidating bullishly, I still look at the evidence and think a move lower is more likely here rather than a move higher. And before you get defensive about that, the fact is, if we look at those 2 points in history, what happened after those corrections is gold then turned higher, and it just kept going higher. It made a massive move higher. So that's what history tells us. The argument from history would be short-term bearish, but then beyond that, really, really bullish. And those corrections that were 15%, they only lasted like 2 months, and so we're in the second month of the correction now. So I know that's a lot to think about, but that's what I'm thinking about here as far as gold and silver is concerned. And just another point I want to make about silver, this rebound we had in silver, this was a record move in a short amount of time. And in this chart, we plot two indicators at the bottom. We show silver, its rolling rate of change over 50 days. And then below that, we show silver's distance from its 200-day moving average. It's actually the 200-day exponential moving average. But, 200-day, fair enough. And so I'm looking at, when we had similar moves in the past, how did silver perform after that? And so if you look at the other points in history, when silver has reached the kind of extremes it reached, a month or so ago, there tends to be a sizable correction after that. I mean, there's not that many instances. You look, 1974, that was a peak for a couple years. 1979, then the market kept moving higher to its biggest, one of the biggest bubble burstings of all time. Then it did it again after silver started crashing, and then again in 82 after, that devastating bear market was over. 87, it made a huge move higher, but then it sold off after that. 2011, 2009 didn't quite register based on these indicators, but that's another comparison. Also 2006. So, I mean, the idea that silver is just going to have a little correction here and suddenly go to $50, I mean, it's just really, really unlikely. There's really, if that happens, then that's it for the bull market this cycle. So in any way, I think that possibility is just, it's very, very remote. It's not going to happen. And more likely than not, we're going to see a correction and consolidation that lasts, probably more than a month or two. I mean, 2006, if you look at what happened then, that's actually a fair comparison to where we are now. Because typically these types of moves you get that are these huge percentage moves in markets, they typically happen at the very beginning of a move or in the early stages or at the end. And you can see that looking at history. A lot of these moves were major peaks. But, I mean, that's not the case if you look at 2006, 2004, and also 2009. So I think we are more along those lines. I think this is the beginning of a big move over the next few years. It's not a peak. But with all that being said, this is a medium-term, potentially intermediate-term top. And so short-term, the outlook is not that great for silver. But beyond that, given what I said about gold, next year or two, silver is probably going to be much higher than it is today. So there's a lot of nuance there. I hope you can handle it. Now, this chart here, I analyzed this chart, I think a couple weeks ago on my channel. Subscribe to my channel, The Daily Gold on YouTube. And what I'm charting here is various ratios. We have gold stocks against gold stocks against the stock market, and then gold against the stock market. And if you look at all these ratios, they hit major resistance in the last couple months, and they're now pulling back and consolidating. And I think these ratios are setting up for potentially explosive moves higher, probably sometime next year. And if we see big breakouts in these ratios, what does that mean? That means the gold stocks can really outperform gold. They can really outperform the stock market. And then gold can really outperform the stock market. So, I like to look at things in real terms, and you have a real strong bull market when a market is outperforming in real terms, when it's outperforming all the other asset classes. So these ratios right here, they are telling us that precious metals are set up for another huge move higher, but it doesn't look imminent, as I said for silver in the last couple of slides. I mean, this is setting up potentially for a huge move higher, but the time frame on that is probably going to be sometime next year. I don't know if the move is going to start in 2 months, 3 months, 6 months. I mean, we'll get into that in the future. But the bottom line, the takeaway from this chart is this sector is setting up for another huge leg higher, probably sometime next year. Finally, this chart shows this picture shows the weekly candle charts for all the major ETFs. We have GDX at the top, GDXJ in the middle. At the bottom is GOEX. That's the Explorers ETF. And look, these ETFs made significant multi-year breakouts, and there's strong measured upside targets that will be hit. And I show those targets with the red lines. And for GDX, it's 50. For GDXJ, it's in the low 80s, call it 82, 83. For GOEX, I think it's in the low 50s, call it 52, 53. So there is still a lot of upside based on the breakout that we had earlier this year. And by the way, based on what I said in this slide, and if this comes to pass and all these ratios are breaking out, like I think next year, that will portend to even more upside than what these upside targets are showing. So I just want that to be clear. Now, last point here, given my short-term, near-term caution, look at the weekly candles on the right side. Since we've had this correction over the last 5 or 6 weeks or so, all of these candles they're not bullish. I mean, some are outright bullish, but you really can't find more than one legitimately bullish candle here over the last 6 or 7 weeks. Again, I'm talking about on the very far right, where it highlights the candles over the last few months. And look, even over the last 2 weeks, you see those white candles where the market went up, specifically the bottom two charts. Both those candles, they closed well off the highs of the week. So even at times in recent weeks, when there has been strength during the week, these ETFs have always closed. People have been selling and they've closed well off the highs. So, based on just candlestick analysis, this isn't telling me we're about to see an imminent upside breakout. So that's kind of my near-term thinking. But look, if we move past that and we look 3 months, 6 months, 12 months, everything is set up for another huge move higher. So look, just be patient. Personally, I'm still holding everything. I might trim a few things here and there because in a bull market, you want to buy and hold. You don't want to psych yourself out and sell out and try and buy back at the low. That's not going to happen. Just keep it simple. If you have a lot of cash, wait, because I think there's going to be some good opportunities coming. One of those opportunities, by the way, before you close this video, you can get from me. If you have not already gotten the free report on my top stock pick, follow that address above, opt in and check your email. This stock has 10x potential over the next 3 years. It's moved a lot, but it's off its high. It's probably going to get a little bit cheaper in my opinion. And even from this point, there's still plenty of upside. It's still 10x, I think, over the next 3 years. The CEO has built $1 billion company before, and he owns a lot of the stock. So if you haven't gotten this report, you owe it to yourself to get this report. Thank you for listening to this video. Hope you enjoyed it. Subscribe to my channel at The Daily Gold on YouTube. And check out my website at thedailygold.com. Get the top stock pick if you already haven't. Thank you so much.